Dr. Kim Anderson, our crop marketing specialist, joins us now. Kim, questions this week about the Israel-Hamas war and whether there will be an impact on prices.
Well, nobody knows what's really going to happen in that situation there, but right now it's had, in my opinion, zero impact on prices. Now, it does increase the risk of something happening, and when you increase risk, you have a tendency to decrease prices just a little bit. But for all practical purposes, right now, I don't think there's going to be any impact.
What is currently happening with prices?
Well, if you look at wheat prices just leveled out. I mean, we've moved in maybe a 15-cent price move since the first of the month. The prices up in the northern Oklahoma around $6.10, $5.80 down in the deep south. I come up I-40 in that area around $6. Not much going on in the wheat market right now, but prices are flat. You look at corn. They've been working up just a little bit, but again, very narrow range. You go back since September 1, they've been in about a 20-cent range from 465 to 485, and they're right around 475 right now. Soybeans went down and hit that $12 level. The big question was, would it break 12? Yeah, it broke 12 maybe one day, 2 days. It's back up to around almost 12.50 now. So it looks like beans have, and all the commodities right now have bottomed out, at least for a little while.
Let's talk about expectations now with the crops, starting with wheat.
Well, you look at wheat. Let's go over the stocks to use ratio, because that kind of describes what's both happening in the stocks and the consumption side. You got wheat for the world stocks to use ratio. It's projected to be about 33%. The average is 35, so below average. Tight stocks on the world. If you look at the United States, it's at 36. The average is 42. So both world and U.S. stocks are tight. The average price is $5.85 in Oklahoma. You'd expect the prices to be well above $6, and right now we got slightly above $6, so I'm kind of optimistic with wheat.
How are corn and soybeans looking?
Corn, you've got the stocks to use ratio in the world, 26. The average is 28, slightly tight in the world. Stocks to use ratio in the U.S., 15%. The average is 12, so excess stocks. So that means our 485 average price is 460 or so, somewhere in that, slightly, but I think that's about where it should be until something happens. I believe we're going to stay in that area. Soybeans, 30% stocks to use, average 28 in the world, above average there in the world, but the United States 5%, average is 8%. So tight in the U.S. You got $12.50 beans, the average is $10.70. So there's some potential for bean prices to come down. We'll have to wait and see on that. So I expect corn flat, wheat up, beans either up or down, one or the other, but not a lot because we got tight stocks in the U.S.
Last but not least, how is cotton looking?
Well, our cotton harvest is going on both in Oklahoma and around the United States. You've got cotton prices. They've fallen off a little bit the last week. If you look at the chart for cotton, now this is the December futures contract. You know, we got up around 90 cents. It's down around 82 now. So we went from 90, mostly really 89. It dropped to 84. So really not much movement there in cotton. You look at the stocks to use ratio for cotton, 20% projected, 28% average, so you'd expect above average cotton prices. That's what we got, and I think we're going to hold those.
Okay, Kim, thanks a lot. We'll see you next week.